A public limited company is a business structure that allows a company to sell shares to the general public. You will often see these organizations referred to as a PLC, which stands for Public Limited Company. One defining feature is that there is no limit on how many people can own a piece of the business. These companies are subject to strict regulations to ensure transparency for the public investors who buy their stock. The main difference is access to capital. PLCs trade on open markets, while private companies do not. By opening shares to the public, these firms can raise significant amounts of money to expand operations or invest in projects. Because they handle public money, these companies must follow rigorous reporting standards set by financial regulators. Understanding business structures helps you better analyze the companies you invest in. Educational content, not financial advice.